I'm happy to share with you that today there will be people from all around the world and also from diverse types of profiles, because you will have researchers, you will have also people from tax administrations, also tax experts from multinational corporations, and also consultants. So it's a really wide range of profiles that will be present today. I'm going to wait 1 more minute to start. For the people who just joined us, we're waiting a little bit for everybody to have joined us, and then we will start the presentation. I was explaining that there's a lot of different types of profiles present today, which is good. Okay, it's 10:03. I think we are going to start. All the other people will have to join us progressively. So let's start the discussion. So today we are here together to talk about the Open Tax Society. Thanks for all of you to have come for this presentation. The purpose of today is to talk about building an open and auditable tax infrastructure. So basically, when we do tax, there is a lot of uncertainty, a lot of information that is needed by a lot of stakeholders and are not always readily available. And we think and we believe at Algonomia, that's why we contributed to the foundation of the Open Tax Society, that using the methodology that exists in the world of open source would improve the quality of tax systems for everybody. So this presentation aims not only at practitioners in the private sector, but also researchers, public policy analysts, and also people in the tax administrations, because, well, the world of tax is something that we have built to power and fuel our societies, and there are inherent costs in implementing them, and we can all work together to diminish this implementation costs, will make the policies better, and render also companies more efficient. So what we will cover today are, well, a little bit of what I just talked about, the structural problems that are inherent in some tax systems and the definition of a good tax system. Then we are going to talk about the 5 open initiatives that have been identified by the Open Tax Society so far, and to which you are most really welcome to contribute, and that you will also be able to profit from as end users or as beneficiaries. And finally, we're going to talk about how we can collaborate together on this project, because the purpose is here to create a community of tax specialists that want to make tax systems better in a collaborative and open manner. So just a bit introduction of who I am. My name is Walid Eljaafari. To simplify and synthesize my profile, I'm a math guy lost in the world of tax for now about 10 years. I have a degree in math and sciences from one of French engineering schools. And at the same time, I did a little bit of law on the side, mainly because I was interested in understanding how economic math model that we were building were translating into law, because I thought it was a bit theoretic what we were doing in math. And I was able to discover the big divide that can exist. But at the same time, also, I had just finished watching Suits, so I wanted to know more about the world of the law. So since 2017, I was involved in a project called Algonomia. So it's a company that I co-founded that builds and operates solutions for international tax department, which allowed us to be connected to all of the problems that we are trying to solve, the difficulty to gather tax information on all the jurisdictions in an easy manner, the difficulty to gather information on the various tax systems, and so on. And part of the project of the Open Tax Society is to build a way to collaboratively solve this issue. Now, let's go into more detail about all of these difficulties that the tax community is facing currently. I already talked about it, but there is currently a big disconnect between policy and practice. It has been underlined a lot recently with Pillar 2, where a lot of people or a lot of tax practitioners are insisting on the fact that the requirements and the complexity are at odds with the capabilities and the data quality that are present in multinational companies. And the idea is that we are building tax law in order to make tax policy real and efficient. And if both are distant in terms of understanding of the law and how it should be applied, then the tax policy will be inefficient on one side, and on the other side, the taxpayers will endure a lot of costs to be able to be compliant. And so basically, from my perspective, the main interest in creating this community is to try and reduce this divide. The second element that is very important from my point of view is that tax policy is a public good. And right now, with the development of private databases, and it's something that has been happening in the past, well, there is a lot of this data that is being stored behind paywalls. There are a lot of companies that sell this information. They don't sell just services or advisory. Some of them just sell the access to structured information on public policy. But from the perspective that we have at Algonomia and my own perspective is this is something that should be provided by tax administrations directly. It's not normal that taxpayers have to pay third parties in order to be able to have access to the law that they're supposed to follow. And so from our perspective, investing in the Open Tax Society is a way to correct part of this issue. Sorry, I'm gonna let some people in that just connected. Done. Another element that is key for me and that is really important for a lot of tax practitioners is that currently there is a lot of developments in the world of AI. You all know about it. However, the way that it's going a little bit in the direction of these paywalls that we were talking a bit about. You have these black box tools that are starting to appear either in the market as solutions or within tax administration to answer tax issues. And the main problem with the type of generative AI that we're working on right now is that it's opaque. It's really hard for users, for taxpayers, for people to understand how the AI came up with the results. And it's really hard once these elements exist to force it out of this paywall. And it creates a lot of asymmetry between the people who are able to pay for it and the people who are not able to pay for it, which is a distortion that is not positive in our tax system. So what we want to advocate again is that any AI for tax, whether operated within and for the tax administration or externally by any solution provider, should be open source, because this is the only way we can push for auditability, for transparency, to ensure that any stakeholders will be able to have access to the information. And it should not only be the code, it should also be the databases on which it will be trained. And this is why all of the databases that we will produce with the Open Tax Society will be open source, because we consider that it should be the way to produce tax information and tax knowledge. And finally, what we have also discovered in all of these years of working for major multinational companies is that right now the world of tax is becoming more and more an IT process. How to transform accounting information into compliant tax data. But at the same time, it's also a very legal matter. And both words have not yet been made compatible in terms of computation, testing, and so on. And so part of what we want to do is to give both taxpayers and tax administration more visibility in how to transform all of this information in a consistent manner between the world of accounting and the world of tax. This problem has been made very visible with all the Pillar 2 discussions, because there was basically a translation of international accounting norms into international tax norms. And that is a hassle that everybody is trying to solve right now. And this could be done in a coherent and concerted manner. So let me go back a bit to the notion of a good tax systems to explain why making these investments with the Open Tax Society is key from our point of view. The notion of a good tax system is not new. Even Adam Smith, that is cited for the invisible hand, had also a component in this book about the notions that define a good tax system. So these notions, they are translated from the subtle English phrasing of the 19th century into clearer information. So basically, it needs to be equitable. So you pay according to what you can pay, convenient, as easy as possible to file. And sometimes currently it's not the case, because it creates additional costs just to file your taxes. It should be certain, meaning that you need to be able to understand in a predictable manner what will be the outcome, and it should be economically efficient, meaning that it should not cost more to the entire society to put forward this new tax rule than the actual benefit that it generates. So these are very key points that are clear. It needs to be equitable, simple, certain, and cheap to implement the tax. Okay. The second aspect that we need to understand is that the notion of tax certainty is very important in terms of the impact on multinational companies and groups. There was a study made, sending questionnaires, collecting the answers by the University Center of Oxford on business taxation. So what they did is basically try to understand the drivers of choices to invest in one or another country and the impact of tax uncertainty on these investments. And during this questionnaire, they were also trying to understand what it means, tax uncertainty. And the groups that answered were mostly explaining that, that complexity and frequent changes, it sounds clear and normal for all of us, I get. But what is also very interesting is that since 2016, most groups have considered in the answers to this questionnaire that this has increased in terms of complexity. So basically, the complexity of tax systems has been growing, and some papers have already discovered these tendencies, and it has been established, if you want. So it's not a feeling that people have that is not correct. On the other side, there is another important component of the tax system that was not in the 4 points that I just talked about. It's a notion of distortion. So basically, whenever you put a tax in place, it can drive the behavior of your taxpayers to change the way that they operate, either in investment, hiring, location, prices, and so on, in order to minimize their tax. And the problem is that every time that you're going to put a system of taxation in place, because you will select for some characteristics. Well, just the fact that you're selecting for these characteristics will have an impact on the choices made by the taxpayers in order to incorporate the tax minimization in their choices. And what is really interesting is that there was a working paper published by the IMF that tried to evaluate in the American economy what the American economy would gain if there was no such distortionary effect in the implementation of the tax system in the US. So basically, if everybody was taxed according to their real characteristics and not the selection criterion, just to simplify. So in total, what we have, what I wanted to put forward is that by working on the notions of certainty, simplicity or convenience, economy, equity, and neutrality, we will make the tax system more effective. And what we have tried to do with the tax initiatives that we worked on at the Open Tax Society is to try and tackle a little bit each of these issues. So I'm going to transition a bit to talk about the open tax initiatives, but the idea is that when we decided to create an open tax calendar, well, it will, if everybody is collaborating on it, and if also tax administration are also working on it to make it a bit more qualitative, well, this will help everybody in terms of certainty. It will make it simpler and cheaper for everybody, and it will level the play field for everybody in the tax system. So this is the illustration of how, by collaborating on this type of issue, we can work on the different component of the tax system that I just exposed. And then we have identified other elements. For example, we have identified what we call the open tax systems, the idea of having an algorithmic and mathematical representation of the computations that happen in each tax systems or in some of the pieces of international tax law. Again, it will make the system more certain, easier to put in place, cheaper to put in place, and less costly to implement by the tax administration, more equitable because, well, you will not be advantaged by the fact that you have more resources in order to create your computation. And finally, well, because everybody will have the same type of computation, there will be less distortion. One other element that we worked on was the notion of open tax data. We'll talk about it in more detail, of course, a little later. So the idea is to gather all of the public information that are available, the tax proofs, the ETRs, the public BCR, putting them in one single database and making that available for everybody. The idea is that all of this data will be available on the internet, and it would be a shame for it to be available only behind a paywall or for some parties to have access to it and be able to use it, and for others not to be able to do that. So it will help us work on the notions of equity and neutrality. I'm going to skip for now Open Tax AI, but I'm going to talk about the Open TP benchmarks. This is the same idea of the open tax data. So basically, the notion of benchmarks, you all know about it. For each of your entity profiles that are the tested parties, you will have to create and generate the benchmarks per sector, region, and functional profile in order to justify the margins. And most of the time, it will be a TNMM benchmark on some of the KPIs, or it will be benchmarks on some types of transactions that are completely available on the market, like for royalty fees or for interest rates and so on. So basically, the idea is that these information right now, they are created every single time by every single group, and they are not reused, even though they are supposed to be comparables. So we have a lot of groups that are creating comparables between each other many times. And so our purpose here is to create a collaborative solution that would help, again, make it everything simpler and cheaper for everybody. So basically, these are the 5 open tax initiatives that we are working on right now. Let's dive deeper into the open tax calendar. Oh, sorry, I have an important information to give first. So first, the core principles and vision that are driving the project are, of course, the fact that everything is supposed to be done according to the open source standard. So basically, everything will be open source, no paywall, free, and everybody will be able to get access to it, launch research on it, and use it internally for their own benefit. Other element is that all of the data that we're going to use will be sourced responsibly. Everybody who contributes or for which information has been quoted will be cited. And the idea is that we will ensure that the sources are always transparent. It has two roles. First, ensuring the quality of the information. And second, well, if you have some people doing a good work gathering some information, it's important to cite them. And finally, the two important elements that we believe in are the fact that it should be collaborative by nature. So everybody in the tax community will be able to contribute, propose changes to either the data structures, the functionalities of the solution that we will show, or just contribute to fill in the databases. The best case scenario is if we really have, just like some of the biggest open source projects that exist, a real community of tax experts who develop these databases. And something that is key for us at Algonomia, at least, it's automation ready. What does it mean? Well, we want to be able to automate most of the tax calendars, tax computations. We do not want to have to do all of these things manually through either Excel formulas. It needs to be directly usable either through APIs or through elements of codes that are available to be implemented directly in other solutions. So basically, you need to be able to automate your tax workflow and tax computations using the results of the work that we're doing. So these are the principles that we will apply, and don't feel free to question whether or not they've been applied in the project that we're presenting right after. Another important point is the legal framework. At the beginning, as you understood, you saw that I'm the CEO and co-founder of a private company, Algonomia. But right now, I'm talking as the president of the Open Tax Society, which is a non-profit organization, une association loi 1901 de loi française. So it's a French association. And so basically, it means that it's a non-profit. There is no product. There is no price. There is no commercial purpose. Everything is done for a scientific purpose, educational purpose, and is free for everybody to use. In terms of management of intellectual property, we have developed some code in order to operate some function. Algonomia already puts its code in open source, so anybody can reuse it and share it too. The only difference that we put is this A in the GNU AGPL license, meaning that if you reuse our code and you make changes and to use it yourself, you need to also put it in open source. Same thing for the data. The data is the property of the Open Tax Society, and all of the data is shared in open source in the Creative Commons. So basically, everybody can look at it, use it, and use it internally, but it cannot be used for commercial purposes. You cannot resell this data. Of course, you can use it to power some of your internal tools in your companies or in the softwares that you sell, but you cannot sell the data per se. And if you are updating, completing this database, again, this is the meaning of the SA, you need to also share your production. The idea is everything is free, will be developed for free, and will stay free. And that is really the way we want it to stay. So now let's start with the Open Tax Calendar. If some of you were present in June for the Open Tax Calendar webinar, we have already shared a first version of the Open Tax Calendar. It's a database of tax obligations Currently, it's mostly BEPS-oriented tax obligations like CBCR, like all the Action 13 elements. You also have the transfer pricing obligation and documentation and the CBCR notification. So basically, you already have a lot of obligation there, and you can already use it for yourself. Right now, we're also continuing the development on this solution, and we are adding functionalities that will allow the community to contribute and to request the data directly from API calls to go in the direction that I talked about, meaning the API automation. We have on the side of Algonomia already used this data to run some automations, but the idea is that this functionality is supposed to be completely available for any third party and any tax calendar that any actor would want to implement. What we want also to implement, because there are also companies that don't have any calendar management inside of them, we want to make it a bit more customizable so that you can enter the list of entities that you have and the beginning and end of your fiscal year, so that you can already have some form of tax calendar directly in your open tax calendar in your session. In terms of detailed features, I talked about them already a little bit. You have the ability to log in with your LinkedIn account and to either browse the dashboard, see the information that has been collected. You can export them into Excel, and you can also, soon, it's not in production yet, request some API calls. There is also some system to rate the information that will have been contributed by other users, and you are able to propose corrections or additional sources to the information, because the sources are cited, but sometimes you will find better sources yourself, or you will not agree with the data point, and it's important that you can propose corrections. And what is important also is that if you feel like the data structure that we have proposed is not complete or not good enough, well, again, it's an open project. We are welcoming your input to try and make it better. Who does it benefit? It benefits all the tax specialists within M&Es, also all of the advisors, because it's an additional data source that is available for free and that can be used for automation. And also for tax authorities, because, well, it's a channel to share all of the changes to all of the taxpayers that are using the solution, that it comes here at no cost, and to which they already have the ability to contribute and make changes and disseminate them automatically to some taxpayers, for the taxpayers who have installed the automation functionality. And finally, for the other software vendors, maybe ours, Algonomia, or any others, well, if they want to have data to feed some tax calendars of their clients, well, they can just use the API keys and automate their client's calendar. In terms of next steps for the open tax calendar, well, right now we are finalizing the contribution functions so that people can add sources or propose corrections. We are finalizing also the API calls so that external solution providers can get the data from the open tax calendars and automate the calendars automatically. And finally, we are also in parallel trying to change some of the initial data sources that we had put that were publicly available, mainly advisory shared information. We'll try to have the primary sources, so basically the direct links to the tax administration's websites where the actual legal text is available. And finally, the next steps, but that's in a bit further future, we would like to extend it to all the direct taxes and maybe indirect taxes and so on. But for that, we have less competencies at Algonomia, so don't hesitate to try and contribute to the project yourself, or contact us if you want to contribute to this component, or if you have needs in this direction. And finally, the idea is that we want to associate with some partners, and we are discussing it right now, so that they can contribute directly to this calendar. Now I'm going to talk about the other initiatives and to explain really what's behind them. but they are not live yet, and the developments are a lot less advanced. But it also means that there is a lot of room for anybody who wants to be involved in such an initiatives to either contribute in a very significant manner or even take the lead if they are interested in doing so. So don't hesitate to contact us if that's something of interest for you. So the first objective of the open tax systems is, again, to have ready mathematical functions and algorithms to represent tax systems to make them computable. Why it's interesting to have that? Well, first, to simplify the computations in, sorry, someone just tried to connect. To simplify the computation of tax in order to file all the different filings possible. It also reduces the implementation costs when need be. Also for taxpayers and their advisors, they also have the ability, which is rare. We propose that, or the solution may propose that, but having the ability to run tax impact assessments of changes in the business is something very complicated, costly right now. Well, if you have readily available functions that allow you to compute the tax impact of one or the other way of organizing the group, it will allow to ease the implementation of such tax impact simulations. This reduces uncertainty for the businesses who want to reorganize or restructure, and this also decreases distortionary effects because it makes it available and possible for all taxpayers and not the one who are able to pay the best services possible. And finally, and this is another very important component in our minds, is that, again, we want to ensure that tax systems are aligned with the tax policy they're supposed to serve, so that you don't implement a tax policy that doesn't have the intended effect. By representing correctly in a very precise manner the way that tax would be computed for the taxpayers and allowing researchers, allowing scientists, allowing tax administration to use it directly to run the public policies analysis instead of guessing the potential impact of a reform. Of course, some administration try to make very more precise computations with the data they have, but a lot of times the computations are not very precise. Well, in this case, it would help make it a lot more precise because it would be the same language used for the computation and for the simulations. Just to see a bit more what it means right now to do tax modeling, a lot of the companies right now, some haven't, but a lot of companies have put in place some automation with regard to operational TP. The determination of intercompany prices is quite automated, but it's hard to go to understanding what is the impact of this operational TP. And so there is another segment that is quite automated is, well, when you have the chart of account that is filled, you're able most of the time to finalize your tax computation and run your filing. But what is available almost nowhere is the ability to change and model the tax impact down to the tax filings, starting from the changes in the M&E process. And that's what we need to aim for, because the people who run these M&E processes, they don't have the time, the knowledge, and the resources to run the fine tax computations that is necessary in some Excel and some external solutions in order to know the exact tax impacts. And this is why there is such a divide between the choices that are made here. Sometimes there is also the work of a strategy consulting firm that will just use the basis times the rate on the round KPI in order to assess the tax impact of change, instead of actually allowing taxpayers to know how they will be impacted by changing their processes. So basically, what we want to be able to do is to know what will be the detailed tax impact of changes in the M&E processes. Just to give you another example of outside of transfer pricing of the role of mathematization, I will talk a bit more about pillar 2, and I will talk about the example of the POPIs, the partially owned parent entities. So I am zooming in here on the definition. It will be a very simple example, but it will translate a bit of the difficulties that we can face when we don't invest in this mathematization early. So basically, a POPI, and most of you know it, it's an entity that is not the ultimate parent entity, that has a subsidiary within the group, and that is a constituent entity, and that has more than 20% of the ownership interest held directly or indirectly by persons that are not constituent entities of the M&E group. So it may seem clear, but the first discussions that we had with some of our partners, they considered that, well, the threshold is 80%, meaning that if FR1 owns more than 80% directly or indirectly of Italy 3 in this case here, then, well, we will have identified the POPI here. Well, if you're a math guy like me, you have philosophical problems when you see such a situation, because directly you can invent a case where you have FR1 that owns more than 80% of Italy 3, and at the same time, more than 20% of its shareholding is owned by entities that are excluded of the GLOB group, the GLOB scope. So what does it mean? It means that it's not the same to be owned directly or indirectly by the UP at 80%, or to be owned directly or indirectly by other third-party entities at 20%, more than 20%. And so this is a divide that cannot be present. Sorry, I need to connect the battery. That cannot be present if you divulge directly the mathematical formula. And so the role, so in this situation, of course, it's the second solution. So this entity, Italy 3, will be a POPI, okay, because more than 20% is held by the non-group entities. But it's not something that is clear and transparent, and it requires the taxpayer to infer the computation it will have to make. And that is the problem, because again, it reduces certainty. And if you don't have the right advisory of the right consultancy firm, they will tell you something wrong, and you may have liability in the wrong jurisdictions in terms of tax payment. So, and this also creates additional difficulties, because there is this notion of indirect ownership interest. This may seem clear intuitively, but actually, when you want to compute it for groups that have several thousand entities and that may have ownership loops, meaning some entities owning a share of one of their parents, you find yourself in a situation when you need to understand graph theory, so deep matters of mathematics that you learn when you are a graduate in mathematics, or the equivalent of either L3 or master. And this is not the population that is working in tax issues. Of course, there might be solutions to be bought externally, but at the end, this is a legal discussion that will be debated by a tax auditor and a tax expert within the company. And so making this notion of indirect ownership interest dependent on the ability of the taxpayer to infer what mathematical formula for what mathematical theory they should be able to use it's not good practice. It should be directly shared somewhere. Here is how you compute indirect ownership interest. There is the formula, but it doesn't exist. And there is no actual indication on how you treat the shareholding loops I just talked about. And so this is a problem. So we start with a simple question of, is this a POPI? With a clear definition that seems to be clear, but in the end, we can find cases that maybe are rare, but that are harder to compute. And again, when you have such a threshold and doubt in the definition, you would need decisions with regard to the mathematical computation in order to lift some of the uncertainty. There have been efforts by tax administrations and researchers to go in that direction. First, I was talking about Pillar 2 and complaining about the notion of POPI, but at the same time, having read a lot of tax law in my life, I can tell you that having a page where you have the list of definitions, having sometimes directly available formula, the Pillar 2 model rules are not the worst case in terms of the ability to understand what's in the law. So it's au contraire, these are good directions to take, having clear list of different definitions, terms that are constant throughout the legislation, and having formulas. This is a very good step. It's even better in some components of the Pillar 2 computation because they have taken the time to create examples in order to understand what rule applies or not, and who is supposed to be affected by what article. So again, steps have been taken in order to limit these uncertainties, but it's not perfect. It's not as if had been produced by and next to the model legislation, an actual computational algorithm for each of the components that requires a calculation. There have been also some efforts within research teams and within tax administrations. So there has been a language developed in France in order to directly code law or tax law, and even some papers in the US are citing this language. It's called Catala, where they have tried to develop a language in order to fit the requirements of law in terms of expression and make it a bit more easier for lawyers to code with it. Sadly, it's not very used by the tax community right now. And also next to it, there is an initiative by tax administration to develop some of the tax computations in open source, in code readily usable in Python, but it's mostly focused right now on personal income tax and a lot less on corporate income tax and direct taxes, which is the topic that we're trying to tackle right now. So what needs to be done in order to move forward in this open tax systems initiative? So the first steps would be to coordinate with the ongoing projects that are not going in the direction that I was talking to, and seeing how we can create synergies. We also need to design the project architecture, define how the contribution should be developed. It's really interesting in the open fiscal element because they have already started sharing code for a tax computation in each jurisdiction. So we could follow the methodology and maybe merge the methodologies. So that all of this is very interesting and could be furthered. There is also a UX to define because we don't want it to be just accessible to developers. We want any tax expert, even if it's not a developer, to be able to use any of these tax computations. And we need to be also make them ready for automation within third-party softwares so that they can get access to the computation rules and insert them in the software's tax computations. So there is a lot of questions to ask with regard to designs. We also have a lot of code that represents some tax systems computations that we would need to add to this roster that we already share in open source right now. And the idea is after that is to progressively fill this database and add code and functionality. So now I'm going to move to the open tax data. This will be a bit less technical, but as interesting, because the idea is that currently there is a lot of tax data that is being shared and that will be shared in the very near future by a lot of multinational companies. And so right now it's mostly annual reports and tax proofs. Soon there is going to be a lot of public CBCRs shared everywhere. There is also for some sector, banks, extractive sector, already some available data that we could use. And there is a lot of other financial reporting elements that can be shared. And so the idea is to create a big database with all of this data to allow each M&E to compare itself sector by sector to its competitors in its jurisdiction in a manner that is completely aligned with their needs. And at the same time, it's also a roster of data for scientists in order to assess the tax footprint of the different groups depending on their origin. What is the use? I already talked a bit about it. It's also the ability to add this information in the analysis of your CBCR, and for tax tech solutions to be able to gather this data and use it directly in your CBCR. As an example, at Algonomia, we have a CBCR application that is used by some of our clients with analytic dashboard. Any other provider having the same functionalities could do the same as us, meaning taking the publicly available data and using them as a benchmarking information while reviewing and analyzing the CBCR. In terms of what needs to be done, to be honest, it's a bit clearer and it's simpler. So basically, we will develop scrapping strategies for all of the information that I listed above. Scrapping meaning a robot that will go to the right places online to download this information and put it in a centralized database. We will also define UX and functionalities so that anybody in the tax community is able to access this information, use it in order to analyze the way it wants, and we will add APIs to allow for direct calls for internal tax solutions for M&Es or tax advisors or for economists and administrations. At the same time, this also will provide the ability of generative AI solutions to extract more information from annual reports, and this can help constitute better databases or answer some questions when you want to have functionalities that look a bit more like what you would have in LLM functionality. So progressively, of course, we'll have to fill this database, but the idea is that it's going to be a bit more simpler to develop. Then the fourth initiative is OpenTP benchmarks. So here the idea is a bit different. Again, right now, a lot of companies are paying for benchmarks that are the same as their neighbor or their direct competitor or any other company that works in the same sector, and it is useless. It is really useless for all groups to try and pay for benchmarks that look the same for the same reason instead of pooling all of these costs. It is useless for the companies. It is useless for the entire economy. So what we want to help do is to help share this information, share this production between all M&Es. And the best case scenario would be for tax administration to just certify some of these benchmarks. I'm a distributor of clothes in this jurisdiction with this risk profile. Here is a benchmark. If it's stamped by a tax administration, here we go. We don't have to have all of the clothes distributor in this sector to pay for the same benchmark and waste resources that way. And so from our perspective, there is a lot to be done here, but it doesn't also only benefit taxpayers. It also benefits tax advisors who want to be able to, well, show their skill in building dedicated benchmarks, and also tax technologists who want to be able to, in their modeling solutions, to showcase what a good benchmark would be in a modeling framework. So basically, if you're trying to reorganize your intercompany flow in your simulation tool, then maybe you want to know what is the typical benchmark for this sector, for this risk profile in this jurisdiction. And with such a database, simulation and tax impact analysis would be made a lot easier. So basically, I have here another slide re-explaining why it doesn't make sense to keep all of your benchmark on your side and not sharing them. So basically, this is a defensive tool. You only use it to justify and position your intercompany margin in a benchmark. and the fact that it is not methodologically predictable, always left to some kind of weird discussion with the tax administrations where you're trying to discuss, is this comparable good or not? All of this creates uncertainty, distortions, and bias in the way that the tax law is applicable. So it's not helping anybody to have such a process, and it would be a lot better to share them between groups, because it would allow to ensure that there is a lot of consistency in the application of these benchmarks. On the other hand, there's also a question of cost, like I just explained. A lot of these TP benchmarks are now commoditized. And so if it's commoditized, well, let's not pay for them a lot of times and just share them. So, and soon, this is our understanding, with the rise of AI, all of them will be automated. So what's the point of paying automated benchmark, all of the same from the same provider, if you can just share them and have them for free? This is our perspective on this matter, and we want to help you in this direction by providing the software behind it. So this will be this OpenTP benchmark initiative. And so let's go back a bit into the economic theory and in-game theory. The idea of if I share my benchmark, but nobody does, I have paid for it, and the others will benefit from the price I've paid, and therefore they will not have to pay for it, and I will have been the one paying for the cost. This is the typical prisoner trap, if you want. So basically, because nobody wants to pay the marginal cost, everybody is paying the marginal cost. However, if you flip the question, if everybody, as soon as they don't have the right benchmark, they pay for it and they share it, then it minimizes all of the amount paid to develop these types of benchmark. So basically, how it will work, it will be it will allow users to research the right benchmark, filtering per jurisdiction, sector, and profiles. Of course, we can add elements of research and filtering or structure if you have other needs and ideas. It will also allow you to load and share benchmarks with the community, and you will have the ability to access the data that is stored within this benchmark using API calls to feed modeling tools. So in terms of what needs to be done, again, we are working on defining the user experience and the functionalities, how to load benchmark and how to reference them, and how we will build all of the research functionalities to get the right benchmark that you need. And finally, you may also want to reference the people who have authored the benchmark so that their work is still related to them, so that if someone needs a comparable work on the benchmarks, they can find the right provider. And there is a way to create such a momentum if key partners decide to go in this direction. If you are an M&E companies, what you can do already is every time that you purchase a benchmark, you add a section in the terms of use that, well, I will share this in open source with the Open Tax Society, and that's it. And if you do that, and you put that systematically in all of the benchmarks that you purchase, well, you will be able to share them, and everybody will be able to share them too. And the other element that is very interesting is that we are contacting right now TP advisors that produce TP benchmarks, but not because it's profitable for them, but because it keeps them on the map for TP consulting services, in order to see if they also want to share all of the benchmarks that they produce the same way. Of course, they need to be anonymized, meaning the initial group that wanted to purchase this should not be named, so we'll ensure that all of them are completely anonymized. And finally, we will have to initiate discussions with tax administrations in order to see how these benchmarks could be certified or be co-produced with some of the tax administrations for some cases. Again, that would be the best case, because it means that you would have absolute certainty on these benchmarks. Finally, the last initiative is Open Tax AI. This one relates to what I explained at the beginning about the fact that black boxes are dangerous in the world of tax. So right now, a lot of the AI capabilities are being concentrated in the hands of some big tech companies. And at the same time, well, it's not qualitative enough for tax and it's expensive. So basically what we want to be able to do is to fight the potential asymmetry of information and capacities between the companies and the states, or between the two companies, or between two states, by making a shared open tax solution that would be available for all. It would also reduce the incentive if we keep on investing, in private AI that are paid, well, it reduces the incentive of tax administration to do a good job in producing tax law because, well, it will be dealt with by AI. But that it is not a good way of thinking about it. An algorithm is better if produced and correct than a potential hallucination by an AI. And it's important that everything stays as auditable as possible. So basically, our purpose is to, again, keep everything as open, as clear, and as available for everybody as possible. So just a little bit about generative AI, because there are questions on the capabilities of generative AI to tackle some of the issue. First element, one of the French scientists who has been working on, and I think there is a spelling mistake in its name here, so I'm going to have it corrected. So one of the scientists who works on generative AI worked at the beginning on generative AI, explaining that, well, right now it is constrained by its inability to tackle abstract notions and its ability to navigate in a world where there is a lot of abstract concepts. So basically, he was more talking about physics. But if we look at the word of tax as also a word where there's a lot of different objects that interact together and that need to be computed in a coherent manner, well, we can tell that it will never reach the level of determinism that we need. The second element that is very interesting is that a lot of money is being wasted right now in useless proof of concepts because only 5% of the projects are ending up in production. Whereas here, what we will do, well, if it doesn't go in production for you, it's not a big deal because in the end, it's an open source project that will be used by the people who think it has value for them. And at the same time, we will build it with the community in mind. And finally, right now, there is a big bubble going on in terms of generative AI and generative AI solutions. So if you invest too early in some of these hyped solutions, you might lose your investment because, well, this company may crash. And so right now, our strategy here is to develop softwares that will be available for all so that each of you can implement their own generative AI solution. Just to re-explain what we want to do, you have seen that the 4 other open tax initiatives are basically complex databases onto which you can extract information. Well, the first thing that we want to do is to connect some kind of chatbot or generative AI solution to these databases to make them easier to use by all of the tax community. So that's the first point. And that's why we're going to develop this open tax AI for everyone. By developing this as a framework, you will be any tax provider, any M&E, or any administration would be able to reuse this AI that we will build for the Open Tax Society and implement it internally. This has 2 benefits. First, well, you don't have to incur a majority of the development costs. You only have to incur some of the implementation costs. And second, if we have to train it, it will be trained on the business matter that is important for your business case. And finally, it's the security, because as it will be a framework that you can reproduce internally, you will not have to send your data to external AI providers, and that may train on this data. You will be able to instantiate, to put it in one of your servers if you want, and operate it internally in a very secure way. And from our perspective, this is what will maximize the use of AI by taxpayers and by tax administration and tax advisors too, is to pool the development of this AI and allow each of these users or taxpayers or stakeholder to instantiate it within their own organization to ensure its security. And so the features that we expect to put there is an easy to deploy LLM generative AI, either chatbot, or we are always still working on it, that will be able to connect to the existing database. We will implement that on each of the open tax initiative, as well as a generic chatbot. And finally, we will build the UX that comes with it. So you will also be able to use the UX that we will build. Now to go back and review everything that we have done, the purpose at the beginning was to explain to you how we can decrease uncertainty, make it simpler to be tax compliant, will reduce the costs, make it more fair to operate in a given tax systems, and limit distortions. We believe that all of these initiatives will go in the right direction and contribute significantly. However, there may be others that may need to be developed later. I don't know which they could be, but any of you can become a member of the Open Tax Society and share and contribute. Now, one of the questions that we got when we started working on the Open Tax Society and sharing it with other stakeholders is, what does Algonomia, so the company I founded and I'm still leading, what does Algonomia gain in this? Well, first, our first initial goal, even in Algonomia, was to contribute to society by helping the public interest tax infrastructure and making it more efficient. Of course, with Algonomia, we are operating software for companies, for the company's benefits, but by transforming the tax matter into something more computable, we actually contribute to the society, and we believe that this knowledge needs to be publicly owned. At the beginning, we had just shared in open source some of our algorithms, but now we really believe that it should be done in a more collaborative manner. One of the main issues that we were facing also is a difficulty to collaborate with some stakeholders that were in the world of education, because we were a company. And so we hope that the Open Tax Society, as a non-profit, will have more ease in collaborating with the educative world. The second element for our company Algonomia, well, Algonomia will be a user of a lot of these databases, whether it's the open tax calendar, whether it's the open tax systems. We operate softwares that will benefit from these developments in the end, like any other tax software, like any other taxpayers. And again, these are public goods that we're trying to build that will be available for everybody, and of course we will benefit from them. And finally, and that will be the case for anybody who contributes, of course, to a public project, we will gain some and hope to gain some recognition by contributing to such a project that we consider good in general. But of course, there will be no special privileges. So if any stakeholders, any other developer firm, or any other advisory firm wants to contribute and contribute significantly to the Open Tax Society, well, they will be as important as us in this development. Because it's an association, it will be led completely democratically. So now that I talk about contribution, how can you contribute to the open tax initiatives and the open tax society? Very simply, just be a user, log in and enjoy, do it regularly. Maybe if you want to go further, use the API keys. You can also share about it, talk about it to other taxpayers and other people that are tax experts around you. You can go further and contribute because, well, if you see errors, if you spot problems, if you have better ideas, you can give us feedback. The idea is that this is a tool that is owned by the community. Right now, the community is represented through an association from which you can become a member. But again, you are there as one of the main stakeholders as a taxpayer. You can also become a main partner. So why we would need some main partners to operate is because, as you have seen, some of the functionalities require, well, development. There is some UX to develop, some designs to develop, some code to be done. There is also some references to identify. There may be also some hosting costs. Right now, it's our company Algonomia who's enduring most of the costs and providing most of the development time. Of course, this will be considered as a donation in the end, but if you have time to spare or if you want to contribute in a significant manner, you're welcome to become a main partner and give of your time if you want. You can even take the lead in some of the projects. If you want to be the one in charge of developing and building the OpenTP benchmarks, you're more than welcome. Because it's not something that is owned by a team, it should be owned by the community. And finally, you can become a member of the Open Tax Society, meaning that you can be part of the democratic management of the association that we have built. But of course, in order to become a member, you need to pay the fee. You don't need to become a member to be a user or to contribute. I want to be very clear about that. You only need to become a member to be part of the actual democratic management of the NGO that we have built. Okay, but it is not necessary. You do not have to become a member. Of course, both partners and members will be directly cited on some of the marketing elements if they accept on initiatives on which they have contributed or on the website of the Open Tax Society. And the contributors, what we were planning to do is to have the list of the major contributors available, even if you're only a user and if you contribute, so that there is recognition to the work that you may put in the initiatives. Now we've reached almost the end of the presentation, so I'm talking about the next steps and the calendar. Right now, we are launching today this call for membership requests in order to find some financial support through the membership fees, but also in order to find people who want to contribute to some of the initiatives. On the 7th of October, we have with Algonomia booked a presentation and a keynote at the IFA Congress in Lisbon. We will talk a lot about Algonomia's products, of course, because it's an Algonomia's keynote, but we will dedicate part of the presentation to introduce to the broader tax community the Open Tax Society. And our plan is that beginning November, we would like to host the first meeting of the registered members of the Open Tax Society to maybe better define the governance and structure of the different initiatives and projects. So if you want to contribute, you have until November, I think, to be able to really make yourself present and tell us what you would want to be doing. And finally, in January, we will have another webinar like that in order to tell you how far we've moved on each of the initiatives. Maybe there will have appeared other initiatives, and we will keep you up to date. So now I will open the floor to questions, so don't hesitate to ask them. I will switch on my view to be able to see the chat. I have an interesting question of Brigitte, who is asking about the IP rights of Amadeus and so on. So basically, this is a very good question. We are not planning to get any of the data from Amadeus or Thomson Reuters. What we're planning to do is let individual users who have built TP benchmarks, whatever the source that they use to do it, that they have acquired legally, they will have the ability to load benchmark themselves and share the rights that they have on the benchmark that they've produced to the community. But we will not use directly through the OpenTP benchmark any data that is stored in any third-party providers. Are there other questions? These are good questions. So there is a question from Salvador. This is a very good question. It's the question of the ability to create an indicator of tax system complexity. So far, the open tax systems has not yet been developed enough in order to have a standardized representation of tax system in each jurisdiction. And however, we could add such a dimension into the initial specifications, but we would have to discuss this further together. But right now, it had not been taken into account. I think it would be possible, but this is something that we would need to incorporate in the design. This is another question. So basically, I explained that the open tax calendar was using generative AI solution to fill the structured database that we have developed for the open tax calendar. Right now, we have assessed the quality of what the generative AI gives for the structured database that we have built for direct taxes, and most of the time it's TP obligations, but we have not the expertise or the experience to be able to do that and assess that for VAT and personal income tax. It doesn't mean it wouldn't work. It means that this is something that needs to be studied, and we're working internally in publishing a paper to assess the quality and share the measure of the quality of this generative AI that we've built with regard to TP obligations. So for us, that would be ongoing work, but this is also something that we can be added as functionalities. But currently, I do not know. Do you have other questions? How do we assess the quality of the information that you collect? Well, basically right now, we have some people, some tax lawyers and advisors who have the knowledge themselves, who are assessing the quality of the element that we have generated. So basically, it's a validation step by human providers. It's not automated. We have also scoring that is automated, but that is a bit less reliable than the human review.